30 billion yen from 100 billion yen before, but Sony's movie division posted an operating loss because of marketing expenses and despite the success of movies like the Da Vinci Code. And the gaming division also reported an operating loss because of R&D costs for PlayStation 3, which launches in November. And TSMC, the world's #1 foundry, expects an 85% posted a better than expected 85% jump in second quarter earnings from a year ago on strong demand for consumer and telco chips, but it says third quarter sales and profit margins will fall because of high inventories and that will remain a problem into the fourth quarter. We've got Japan, Korea, and Australia getting up and running in just a couple of minutes' time. We'll have the opening numbers for you hot and fresh next.
Allianz presents the Formula One Safety Check. What you need is the perfect feel for the situation. Turn 1 right after the start is always crucial. Pulse 180, speed from 0 to 300. Racing in the middle of the pack, head to head, first come, first serve. Turn 1. In every race, the first moment of truth. The Formula One Safety Check was presented by Allianz.
The Harvard Business Review is designed to give you the edge. Every month, it finds solutions to the problems of operating in today's global markets, filled with detailed interviews with the world's best CEOs. The Harvard Business Review asks the questions and gives you the answers. Plus, it's filled with in-depth articles that are guaranteed to improve how you do business. To subscribe, simply log on to hbr.org and follow the instructions. Subscribe to the Harvard Business Review today.
On the next Worldwide Exchange, Mazda Motor becomes the latest car maker to release quarterly results. We'll get analysis. Plus, Takuji Aida of Barclays Capital will be our guest as we assess economic data out of Japan, including CPI and household spending. That's on the next Worldwide Exchange, broadcast live from Asia, Europe, and the United States.
If it seems things are moving too fast, you need news as it breaks to stay ahead. Dow Jones Newswires provides real-time financial news vital to today's businesses.
Consolidation is a reality for the steel industry.
You get access to that comprehensive coverage with CNBC's partnership with Dow Jones Newswires. Get the news as it breaks.
They might delist the company.
For definitive business and markets coverage in real time, Dow Jones and CNBC, the world leader in business news. The stakes.
Up 12.3%, also to a record 100 billion yen.
The pressure.
Still gold is at 680 plus.
The adrenaline rush.
Up 0.9, up 0.1. So up 0.9 on headline.
When the big deals rock the business world.
21.51 billion in sales.
We've got them covered.
As Rick Santelli put his finger on the button right there.
We're CNBC, the world leader in business news.
It's a finally Friday morning. We're going to get into the latest inflation numbers out of Japan just less than 30 minutes ago. Nationwide and Tokyo leading inflation numbers, both coming in line with expectations. What does that mean for monetary policy, a next BOJ hike, and also for markets? Well, we'll talk to Niku Harachi, Managing Director of hedge fund K1 Fund Distribution, coming up. This is Squawk Box. I'm Martin Sung. Top of the 8 o'clock hour on a finally Friday morning, Hong Kong, Singapore Times. Get right to markets and to get you some price action. Here's dollar yen, rather the major currency pairs and crosses, how they're shaping up. Dollar yen sitting at 115.87. It's picked up some just after these Japanese CPI numbers, which are going to break down and get down and dirty within just a couple of minutes. Euro on the dollar, 126.87. Cable 185.65. Dollar on the renminbi, 797.40 there. Oil, quick look at that. Asia side, early goings. Here's how it's doing. for front-month September NYMEX, up 5 cents, 74.59. And markets in Japan, Korea, Australia have just come into play. Let's break it down, get the early action, starting with Kari Enjoji, our bureau chief up in Tokyo. Kari?
Martin, with the Tokyo equity market opening slightly higher this morning for both the Topix and the Nikkei 225, which is trading about 37 points higher than yesterday's close. And the Topix is up 0.4% at 1548. One stock to watch, of course, is Sony after they surprised the market with better than expected first quarter numbers. Has not yet traded, but the pre-market orders look like it's going to open higher. It's currently quoted at 5120. Yesterday's closing level, as you can see, was 5,020 yen. The fact that they revised upwards their full-year operating profit forecast by 30%, despite the fact that the reason behind that is that the way it books its patent-related income should be of comfort to investors today. And the company had always been saying that there's going to be no revival at the company unless they turn their TV business around, which is part of the core electronics division. So we're expecting upside on Sony shares at the open. Betty?
Thanks very much, Kari. Let me run you through some of the sectors to watch in South Korea. You can see that LG Card is moving lower, down about 1.5%, along with the other credit card companies. The reason why is we had data earlier this morning that second quarter net profit down about 14.5% for the top 6 credit card issuers. The reason for that is a higher marketing cost as well as greater loan loss provisions. So there is a rise that we're seeing in credit card delinquencies. Also concerns that we're seeing slowing domestic consumption, and that is going to hit these credit card companies. So again, LG Card down about 1.5%. The banking stocks also in focus. You've seen a rally over the past several days. The largest lenders are going to be reporting their results next week, starting with Kookmin Bank. Those are expected to come in pretty good for these banks. In fact, Kookmin is expected to report record results for the second quarter. You can see Kookmin Bank is just up about 0.2%. Also, Hyundai Motor is going to be in focus with the union voting on whether or not they're going to accept that wage agreement. Lei, over to you.
Thanks, Betty. Well, the Aussie markets open on a lower note. At the moment, the S&P ASX 200 is trading about 0.2% lower at just below 5,000 points, or at the moment it is trading just at 5,000 points. This is after this is taking cues from US market falls overnight. And let's take a look at resources stocks. They are not benefiting from the European strength in resources. BHP Billiton down by 0.7% at the moment, and that is because the resources strength in London wasn't matched in the US, so that is why you are seeing falls in BHP. But we'll be watching out for Main Pharma, which at the moment is gaining after it gave a sneak preview of financial year 06 numbers that were better than expected. Back to you, Martin.
All right, Chung Lei, thank you so much out at Stocks HQ. We'll check in with her a little later on in the show. Now, we've got second quarter earnings season going in full tilt over in the U.S. We're just about halfway through. About 60% of the S&P 500 companies have reported so far. One of the names out overnight, U.S. casino operator Harrah's Entertainment. This is the #1 gaming company in the world, posting weaker than expected second quarter earnings because of high development costs. It warned, warned that those costs will stay high for the next couple of quarters. Out here in Asia, the focus has been on whether Harrah's and its Singapore partner Keppel Land will bid to build Singapore's second integrated resort or casino with ancillary facilities. Harrah's was one of the companies that failed to win the bid for Singapore's first integrated resort. But with just 4 days to go to Monday's deadline, Harrah's told CNBC it is still considering whether or not to go for it.
We think we will if we throw our hat in. We're going to be intending to win. That being said, I think the proposal we made was certainly creative. Now, perhaps it wasn't exactly the desired outcome, and so we should learn from that and make the next bid much more appropriate. And so that's what we're studying right now.
Now, Harrah's is the only major U.S. casino operator that does not have a presence out here in Asia, not even in Macau. But Atwood says he is not worried.
But I do believe we're at the foot of the growth curve for Asia. And there are going to be more opportunities for us. We're a patient investor. We want to do something that our shareholders and our customers would be proud of. And so we're not going to rush in and do something that on the spur of the moment.
Right now, Asia side, just about 35 minutes ago, we had the latest inflation numbers out of Japan's CPI. These are consumer prices, inflation at the retail level, where it matters to you and me. Both Tokyo leading core inflation, as well as Japan nationwide, came in line with expectations. CPI, Tokyo CPI core up 0.4%. Japan nationwide core up 0.6%. The data reinforcing expectations that interest rate rises will continue to be gradual. Take a look at dollar-yen reaction. Just ahead of the numbers, we had dollar-yen sitting at 115.74. So in the event after that, 35 minutes away, or after these numbers, we had dollar firming up just a bit, 115.85 last done as we speak. For more, let's talk to Niku Harachi, a managing director of hedge fund K1 Fund Distribution. He joins us now live from our studios up in Hong Kong. He has about $286 million under management. Niku, good to see you. Nice to have you with us. What did you make of the CPI numbers?
Well, thank you for having me here. It's a pleasure to be here. Well, I think that the Japanese data signals expansion, but I still think that the Japanese economy is vulnerable to the global demand. Now, as you said, the 0.6% growth in CPI was in line with the market's analysts. It was the same number as we've seen the month before, and altogether we're seeing the fastest pace in the past 8 years. We think it's a good thing for the Japanese economy that they're leaving deflation behind, which has been dragging on the Japanese economy for the past few years, now with consumer prices rebounding.
Kari, jump in on this.
Thanks, Martin. Nico, this is Kari in Tokyo. But, personal consumption had earlier, half a year ago, been the driver of the Japanese economy. But it really has slowed down in the last couple of months. And I think that's confirmed by the household spending data we got earlier on this morning. How concerned are you about this? And what is driving the Japanese economy now then?
Well, that's a very, very valuable point. And but if you just look a little bit about the growth in Japan, as we have seen, especially the trade surplus this year for the past 6 months, we did see it shrink around 24%. However, we saw imports outpacing exports by far. But still, if we take the two numbers together, we will see the third record high so far in the history. And we saw expansion, or the export expanding by 14%, which was in line with market analysts, especially high demand in cars from the U.S., which widened the trade surplus with the U.S. to a 20-year high and to more than 4.2 trillion yen. Imports were higher than market analysts with 18.2%, and we did see major increase from oil prices and energy prices, which accounted for around 30%, and of course higher demand in steel. So yes, we're still happy to see that that consumer prices and corporate prices or spending, which was the main driver in 2005, has taken the Japanese economy on its longest expansion for the past 20 years. So we are not that concerned about the Japanese economy as of now.
Niku, Martin Sung here in Singapore. Let's get right down to brass tacks. What's it going to mean for BOJ policy going forward? I mean, consensus is markets pricing in another 25 basis point hike at the very least by the end of this year, so 50 total from zero. Some people think, though, that with the BOJ might be behind the curve in terms of trying to stave off inflation, might have to get more aggressive, maybe 75 basis points total by the end of the year. What's your thinking?
Well, what we have seen BOJ come out with the first interest hike this year, the first in 6 years. So we really think that the Bank of Japan will, if they increase rates, will do it very carefully and not any drastic moves. We think they're very concerned about the domestic economy and the global economy, and especially higher energy prices. So we don't think they want to scare the market. We think they want to look at CPI numbers as they came out today to make sure that it's growing. We think they're going to look at real GDP and make sure that we're seeing steady growth there as well before they will take any actions. But we do think that they will have to take action within the next 6 months.
Nico, we're going to have a major leadership change here in Japan with the Prime Minister, stepping aside in September, when there's going to be a whole new cabinet. And of course, the Bank of Japan is independent, but they are very consensus-driven. Do you think these political changes are going to impact in any way what the Bank of Japan?
I think that their main priority will be looking at key data, how it's going to come out, and especially having a view on the energy prices. I don't think that a change at the cabinet will really make them postpone any future rate hikes if the numbers come out strong as we've seen them so far.
Niku, let's get down on K1 fund distribution here. I mean, how are you playing Japan? I mean, no matter what you think is going to happen to the dollar in terms of it softening more or going dead, as far as the yen goes, even if it does rise with the further interest rate hikes expected, it's still a good carry. You can't get away from that.
Yeah, that's true, and I mean that's also the good thing about being a hedge fund manager, especially these days where we're seeing so many tensions, especially in the Middle East. I mean, we have the possibility to generate profits in rising and falling markets. We are looking at Japanese long-short equity managers. However, we have a very conservative approach, so as of now we're still watching them and haven't made any moves yet.
All right, wait and see what happens then. Niku, good to talk to you, sir. Have to leave you there. Niku Harachi, Managing Director of Managing Director of Hedge Fund K1 Fund Distribution, live from Hong Kong. All right, let's take a look at our world news. Israel of reserve troops that rules out an expanded ground assault. Secretary is in Kuala Lumpur.